Peace everyone, it's Kieran back here with another weekly technical and fundamental forecast. As always, we'll be going over the same structure that we do on a weekly basis, covering the same assets that we do on a weekly basis as well. Starting off with currency strength and fundamental news that could have a high impact on the markets, following through into the cryptos and commodity markets. Now, previous week I didn't upload a video on YouTube, but on a weekly basis we always put our analysis out on the free Telegram group, which you can get access to with the link in the description below. Starting this video off a little bit different this week, I'll be going into our previous week's review and results as well. We can take a walk through our free Telegram group that we have access to, and I can show you the sort of thing that we was covering over the last few weeks. Now, in the previous video which I put out, I mentioned how the Russia and Ukraine tensions were on the rise. The previous video, when we put it out, they didn't actually invade Ukraine just as of that moment of time, but I mentioned how this will be a fundamental aspect that we're looking for to have an impact on the markets on the week ahead and upcoming months. So I'm just going to pop onto our Telegram group. The link is in the description below. This is the public group which we send out free information on a weekly basis. Also, the free forecast screenshots on a weekly basis are sent out on this group as well, so they can be tested by yourself and followed as well to make profits throughout the week. And I'll show you how profits could have been made over the last 1 week or so, just with the free analysis which was sent out on this public group. Now we'll start from around, say, the February the 16th, which is around here. So there was a lot of news and information coming out in terms of the Russia and Ukraine tensions, as the US started getting involved, trying to get involved with NATO and also the UK. What I'm expecting, and what I was expecting, was fears to continue increasing in the market, which would mean that investors and corporations and institutions start putting their money into safer assets such as gold. So if we look here on February, that's the 15th, we can pop onto February the 16th. We saw, okay, so what did we mention here? There was a few fundamentals aspects that I'm not going to be covering any sort of other things that we don't cover in the weekly forecast, for example, like oil and also the energy sector. Of course, I don't cover this on a weekly basis, but if you do want to get access to that, that's on our premium trading group. But I'm not trying to sell anything on this video, so if you do find value just from this, you can be profitable just from these sort of things, and you don't have to look at other opportunities in the market that lie in like gold, the oils and the energy sector as well. So Russia and Ukraine tensions were creating fear in the markets, and we were still in the first quarter of the year, so this is also causing volatility just before the tax phase of the year comes through. I mentioned how in gold we will be seeing increased tensions. So here's some analysis which I sent out. So on the 24th of January, I sent out a key level at the $1,845 level, which was a key level which I highlighted for the lowest risk, highest reward setups. With this free analysis alone, you would have been able to catch at least 450 pips. If you're not clear with what pips are, it's just the value of the asset that you're buying. So for example, if you had a 5k account and you bought gold at this value which I highlighted on the 24th of January at a 0.2 contract size, you would have cashed out at least $900 from that. Clients have been making very nice money on gold over the last previous weeks, as I'll show in the upcoming screenshots. So February the 17th, we hit this key level of 1,894.5, which was a key take profit level for us, and also a new key entry level. So keep in mind, guys, this is all before the Russia invaded Ukraine, and all the tensions actually started getting to a peak. The fundamentals happening across the globe right now is just a bonus and extra reason for us to be buying the market, as I mentioned in the beginning of the week. This is due to the technical analysis was sort of pointing towards an increase in value in the gold, and this news that's coming out in the world was just another sort of spring to get that technical analysis into play and let traders drive the value of gold up. So I've been speaking about how buying pressure on gold has been increasing for the last few weeks, and all the premium members making money from this, which we'll show in a little bit. So furthermore, we continue to go. So in the previous week's video, you can actually go back to this and check it yourself. I mentioned specifically how we're looking for a 500 pip move at about a 1 to 5 risk to reward ratio. As you can see here, there was many confirmations that was given on the public group for why we're looking at these entry points for the value to increase. So as you can see here, number one, we're creating consolidation at our trend lines. Value breaks a liquidity zone. We saw the value retest the 23.6% and catch liquidity into the 28.2%. Fourth confluence that we saw was the fundamental analysis about Russia invading Ukraine. This was still before it actually occurred. We also had the Federal Reserve still taking decisions on whether interest rates will be getting sparked. Just a little side point, due to all of this fundamentals going on, we will be seeing interest rate being spiked up in the very near future, so keep that in mind. And also volatility in the US Treasury hits the highest point since March 2020, which was when the COVID fears and manipulation was going on in the markets. Now, from this 24th of January analysis which I sent out, this could have been the outcome. So as you can see here, the key levels of 1,845 would have been the perfect location to buy. This also fell at the 28.2% level where the liquidity was caught. Underneath this, of course, we know that the institution liquidity and the corporation liquidity lies. Reason being, we saw this massive bullish leg from here. So of course, we set three entry points, three key levels here, either entry points. They could be used as take profit levels, or they could even be used as stop loss levels. I won't go too deep into that because soon I'm looking to do a little overview on how to actually do the weekly forecast and use these key levels for the lowest risk, highest reward entry points. So as you can see here, guys, we caught around 500 pips just from this gold move. The analysis which was sent out was very accurate in terms of where you would have caught the entry and where you would have exited as well. There were three different take level points here. That means there was three different entry points as well that could have been used to stack positions after the first position was entered. Altogether, we caught a nice 500 pips or so on that one. As you can see here, all the take profit levels were hit. We had our buy level, we had our stop loss level, which was just at the key level which I set here. As you can see, 1,845 stop loss level. And as you can see here, three take profit levels were hit, altogether giving us just under 1,000 pips. And we also entered a few other entry points which we gained just under 500 pips on that. So from these trades alone, before Russia actually invaded Ukraine, we was driving the gold value up just due to the tensions. None of the mainstream media was talking about these things too much, and it was all based on the currency fundamentals. So here's another Bitcoin entry that we entered. I'll just highlight how we actually entered this. There was some analysis which I sent out at the beginning of this week. Just here, look. So what I specifically stated here was Bitcoin reached this 71.8% level, which is our manipulated golden ratio level. I specifically mentioned that retail buyers are coming into the market. There's a lot of retail getting excited, thinking that this is a new dip to buy on. I also mentioned how this buying momentum is trending in the market due to retail sentiment, meaning like people like us, people that are not institutions and corporations, are entering the market, getting it trending on the social media. This gives a very good reason for us to go completely against the retail market and sell the market, which I mentioned here. I spoke about technically we should be seeing some Elliott wave patterns. This is a very nice place to start looking for sell positions, which I mentioned specifically here. Place to be looking for new sell positions with risk just above the 88.6% level or the previous week's high, which would have been at the value of $45,890. So any entries here would have been very nice, low risk, high reward. So we went into the week, we did end up getting into those entry points on the premium group. And if we go back to that initial screenshot, you can see we entered just below the trend level. We put our risk just at the 88.6% level, and we had 3 take profit levels at the 43.4k, 41.7k, and finally we had the 37.3k as our final take profit level before we see any reversal or potentially any other buy moves coming into play. Now we stayed in this trade, as you can see here further on during the week. About 2 days later we hit plus 8% on the trade. We dropped about $4.2 thousand from the initial entry point where I told you to start looking for sells. So this alone, if you sold one Bitcoin at that value, you would have been up 4.2 thousand. As you can see here, we always give out different confluences as well. We hit the 71.8%. We had a rejection from the ascending trend line according to the Wyckoff system, and of course this level was also a previous order block. Now going further into the week, it's February the 18th, which was about a Friday, and then it came to the previous Sunday and we saw our take profit level hit very nicely. As you can see here, we got in up here. The red square here represents the risk that we put on this trade, and the green represents the profit potential and the profit limits that we was expecting. So I was expecting the value to drop from here where this green zone starts all the way down to the 37.3k as I mentioned at the beginning of the week. Now this level was hit, we moved on, and obviously the Russia and Ukraine tension started coming into play. We took advantage of this. It's just a video of the previous week, me mentioning the Bitcoin drop and the positions I was looking for. Oil updates, of course I'm not going to be covering that in this video, but as you can see we made 284 points on the first entry, and on the second entry we made another 424 points. This was based on the liquidity levels which I sent out at the beginning of the week as well. So as you can see here guys, all of this information is very necessary to enter in positions and making profit throughout the week, including the initial weekly forecast which I do on a Sunday, just to get an idea of what's going to happen in the upcoming week and months ahead. Now as you can see here, there was a lot of fundamentals coming out, a few evacuations starting to begin. I was keeping up to date with all of these things. We saw a few fundamentals come into play with the Euro USD, which I'll be going into as well, and also we saw gold fundamentals coming into play as well. Now this was the previous week Sunday when I didn't create a new video, just due to some software issues, reason being I'm covering it in this week's video. This week's video will be a bit longer than usual, but I wanted to go over the Telegram to show you how accurate this analysis can be. As you can see, there was an example of analysis which could have been used from the 24th of January, which is over a month ago now, to get very nice low risk high reward entries and create more profitable opportunities in your portfolio. Here was a bit more further analysis coming out. There you go. I mentioned how we had a few disruptions of our software. So we got into the previous week now. I sent this out at the beginning of the week before any invasions took place. It's a very interesting chart analysis which has been created. You can see that they've compiled the values of the stock during different phases of history, such as the Vietnam War, the Gulf War, we have the Afghanistan War, we have the Iraq War, and the Crimean crisis in Russia. Through all of these examples, you can see that when the invasion actually take place, there is manipulation that is caused in the market, usually beginning with some sort of dip and then following into a massive bull run, majority bullish sentiment coming into play. We can see there's very nice pullbacks taking place on all of these markets as well. And other than the Afghanistan war, when the air campaign started, we saw bearish moves take place. Rest of the examples show bullish scenarios and bullish outcomes after these invasions actually took place. I won't be getting into too much of the politics and my biases behind the Afghanistan and even the current Russia and Ukraine tension that's going on. I'll save that for a different video. Due to it not really having an influence on you guys being profitable. So furthermore, we went into the week. Here's a few of my people making very nice money from the previous week's analysis. As you can see here, one of my clients caught around just under £700-800 within like a 2 or 3 day period, just trading the analysis which I just showed on this video previously. So furthermore, we went into Thursday last week and we saw Putin announce that he is invading Ukraine. He started sending in troops from left, right, north, south, all directions. Ukraine is being invaded, and now they're going directly to the capital to potentially overthrow the government. On this news, we bought gold. This is the actual entry point that we got into, but I'll go into my analysis. I don't usually send my live entry points, but this was a very nice example of by the invasion, as I showed you on the previous screenshot, and we caught I think it was just over 200 pips on this at the end of it. So we got in at a very nice consolidation phase as well at the $1,911, and we got out around the $1,930 level, which is about 200 pips. So if I go further into it, during this same moment of time, we caught entries in Ethereum as well. As you can see, I mentioned how this is a perfect place to look for new sell entries with the lowest risk, highest reward, with the key levels on the right hand side that I give out on a weekly basis, guys. 2,650, the first take profit level would have been the 2,300 level. Going further on into the week, we saw these Ethereum positions get into profit, minus $200 on this position right here, which I mentioned at the beginning of the week to start looking for sell entries. This was a live analysis of a few positions that we stacked in. You can see here that we entered on the 71.8% retracement level, and we took our profit at the 78.6% level. We left partials in, moving the stop loss to break even, making this a risk-free trade. A few other fundamentals in terms of the Russia and Ukraine. Okay, here's another trade that we entered. So as you can see here, guys, we're 20 minutes into this video, and I think we've covered how we caught about minimum 2,000 pips. Now, taking this into account into actual money wise, a 0.1 can represent a pound in the market. So if you'd done all of these trades at just a 0.1, you would have made at minimum $1,000. So Euro USD, what was we looking for? We were looking for bearish continuations. I mentioned this on the previous week's video as well, specifically named Russia and Ukraine tensions. So this will just basically be a continuation from there, as we're still facing these tensions and looking for the values of the markets to be manipulated. So I mentioned here how we still got a bearish bias as DXY continues to increase and the Euro index continues to drop. We was at the 1.1305 level here, and my key level which I gave for potential reversal was the 1.1105. As you can see here, guys, the 1.1305 was just above the previous week's low, and it was used very nicely for the value to drop all the way down to the 1.1105, which is the specific key level which I set out over 2 or 3 weeks ago now, guys. The 1.1105 would have actually been there for at least a month to a month and a half now. You can access this directly by yourself on the Telegram group. Description is below. Okay, so we got these very nice Euro USD trades just based on the indexes, and then as you can see here, guys, the manipulation of the markets was very clear this week. We had the tensions of rising, so we bought into it as I showed you previously, and then we had this massive downside momentum. So we got to this level here. As you can see, there's a little bullish candle that occurred. There was a bit of consolidation going on at this moment of time, showing us bearish momentum. It was showing bearish structure. Also bearish patterns were being formed. So we entered a sell position here with very low risk. I think it was just about 50 pips. We risked about 50 pips, and as you can see here, we took profits at plus 320 pips, all the way back to our initial entry point, which we entered the buy on previously. So furthermore, guys, that's it. So that was a brief overview into the last 1 or 2 weeks progress, review and results as well of what can be done with this weekly analysis, which I sent out absolutely free on YouTube. Also on the Telegram group, I send out actual screenshots directly from TradingView, which is a software that you can actually test these analysis which I'm sending out and test the accuracy of the key levels which I send out on a weekly basis as well. So going into this week, guys, of course, midweek last week, Russia ended up confirming entry into the Ukraine territory, and this has caused fear in the markets, making investors and traders start putting money into the safe haven assets. I'm just going to go straight into the economic news forecast. Of course, this week is packed with lots of news coming out, lots of high impact information and reports that will definitely have a domino effect throughout the markets. Now, overall, the Russia and Ukraine tensions will be there. That will be the primary fundamental analysis that I keep in play. Of course, the new trending information that we're looking at in terms of the Russia and Ukraine fundamentals will be in terms of the sanctions which are taking place in terms of like the energy sector and oil and the oil sector. And also there is news now trending that the Russia will be basically removed from a system that they call the I believe it's the SWIFT system. What the SWIFT system is basically a sort of communication method for institutions and corporations to confirm their transactions that are made internationally. So they don't actually make the transactions through this specific system, but this is a security system for transactions to be recorded on, and this is basically used as an international method of security, confirming transactions before they're even made and then after they're made as well. Now, I have a few theories of what could happen if Russia do get disconnected from this. It does link to the cryptos as well, but I'll be putting more information about that on our Telegram group. It is a theory of mine, and so far the theories which I've mentioned in the group have actually came to light. So Monday we have a bit of high impact news coming out. We have we got the president of the European Central Bank speech coming out, which will potentially have high impact. They may speak about interest rates and things like that. Furthermore, going into Tuesday, we have important news such as an interest rate decision coming out of the Reserve Bank of Australia. Of course, on this weekly overview, I only cover the dollar pairs, such as like Euro USD and also pounds against the dollar. So this won't really have an effect on our weekly overview, but this is a high impact report that will have a domino effect throughout the market when it comes to the Australian dollar, the New Zealand dollar, and also the Canadian dollar. Furthermore, we have, I believe, a speech from Biden coming out as well on Tuesday, which could determine a few factors as well coming this week. Was it on Tuesday? I'm not too sure. Oh yeah, here we go. So we got a speech from President Biden, State of Union speech. Shouldn't be too high impact, but we've kept it there just in case. On Wednesday we have a speech from the Federal Reserve. We also have Bank of Canada interest rate decision, which is going to be high impact. Of course, it don't affect our weekly forecast due to it just focusing on the USD pairs, but this will have a definite impact on the Canadian dollar. Okay, so going further on into the week, I would say they're probably two of the most important factors to be taken into account at the beginning of the week in terms of like the interest rate. The speeches and things like that won't be as important as the interest rate decisions. Of course, this is the last week of the month as well, so we have NFP on Friday, which is the non-farm payroll. It's a monthly employment report based on like the income and employment of citizens. So on Thursday, I don't think there's too many things. There is a speech coming out, I believe, from Jerome Powell. Yep, so we got Fed Chair Powell testimony here. He's probably going to be speaking further into interest rates and things like that. So let's pop back onto here, and obviously on Friday, as I mentioned, we have the non-farm payrolls coming out at 1:30 as it does every month. If you need further information into these fundamentals and what they actually mean, you can pop onto this website absolutely free, create your account and keep up to date with these fundamentals that have an impact on the market on a weekly basis. So I'm going to leave it at that for the economic news forecast, and then we'll go straight into the dollar index. So of course, what I want to mention as well before we get into this, on a weekly basis I do highlight a lot of different aspects on the chart, but what you have to take into account, guys, is if I remove all of my analysis and pop it onto a line chart, in the chart there's only so many things that we can determine. For example, on the bottom of the chart we always have the dates leading back to when the asset first begun trading on the stock exchange, and on the right hand side we always have the value of whatever asset I'm covering. In the market we have buyers, so when people buy, the value goes up, as you can see here, and we have sellers, so when people sell, the value goes down. And on a weekly basis we have these moves, and our job is to basically determine what will happen in the future. Now we use candlesticks. If you want further information into what candlesticks are and how to understand them, there's free educational material which I have on the Telegram group which you can get access to, and this will give you a nice basics and fundamentals overview of understanding how to trade any chart. And this is all available free to you guys, yeah? So I just wanted to mention that before we get into my analysis. So Currently the dollar is coming down, and we can see that the euro and the pound is actually increasing in value, reason being the assets of euro USD and GBP USD are increasing in value as well. On this upcoming week, I'm looking at this as a retracement. So what we can do is put a retracement tool from the previous week's low to the previous week's high, and as you can see here, this the 95.75% level falls perfectly at the 100% retracement level, which will probably be the lowest risk, highest reward entry point that we'll be able to sort of get into. So we could see something along the lines of this, a little drop here, some sort of consolidation at this phase, and then we see a move back up. On the other hand, we could see the value continue to come down, and if the value does break this previous week's low, we will be looking at further shorts back down to this key level at the 94.75. So overall, this 95.75 is our target level for new entries, either going long or either going short. Due to the fundamentals that are taking place in the markets, it's still very volatile, as I mentioned last week, and we'll potentially stay back and just spectate until we find clear indication to where the markets are going to be going. I'm just gonna run through this is the euro index. I won't be covering what we'll be expecting, but as you can see here, as the dollar drops, we see the euro increase in value. And if I actually go into the euro against the USD chart now, you can see that this has a major reflection on the euro USD chart as well. So the dollar is going down, the euro is increasing in value, meaning that the value of euro against the dollar will be increasing overall. But I'll get into the technical analysis of the euro against the dollar a bit later on in this video. So after that, let's cover the cryptos. So cryptos, as you saw last week, I was short in the market a numerous amount of times. We was also I've got a buy in euro. I think it's in Ethereum against the dollar right now. We'll be putting an update on that on the Telegram group as well. We got into the buy at the just halfway between the 78.6% level and the 71.8% level, just around here. If we come back down to this potential inverted head and shoulders pattern and we don't show rejection from here, I'll be taking profits. But overall, Bitcoin dominance, just a quick mention, we're still consolidating, still looking quite bullish, to be honest, after we caught this low down here at the 39% level. Right now we're floating at around the 42.4% level in terms of Bitcoin dominance, and I'm looking for this to continue rising, to be honest. I have a few theories that I'm working on in terms of the Bitcoin dominance as well, and how it sort of gets affected when these fundamentals come into play. I also want to mention the total market cap before we get into the technical analysis. So this is the total market cap of all the cryptocurrencies, including Bitcoin and Ethereum. Currently decreasing. We found a bit of support, as you can see, on this green ascending trend line. This ascending trend line is according to the Wyckoff system, starting at the most initial market cycle of the institutions and the whales that are in the market. Overall, if this key level gets broken, I'm looking for value to, well, the crypto market cap to come all the way back down to the 1.148 trillion, and from here we'll be able to see if we can start picking up any sort of bullish bias, and we'll see if the value can increase from this level. I'll be keeping you guys updated throughout the week, and also putting screenshots of this exact same chart that you see right here on Telegram. So, and of course, we're going to be covering the market sentiment when it comes to Euro USD, the pounds against the dollar, and also gold. I'll do that as we go through the technical analysis for gold. So this week, I'm going to start with, because I've already spoke a bit of the euro against the dollar, let's start with the euro against the dollar. And if you see here, as I mentioned, the index when it comes to the dollar and the euro is usually at a negative correlation. So we saw the index of the euro increasing as we saw the index of the dollar decreasing. So this asset is the euro against the dollar, which is a reflection of both of these indexes, and as you can see, it's increasing in value right now. We caught support, and we saw this low be created here at my key descending level, according to the Wyckoff system and the initial market cycle that occurred, being used very accurately. Keep in mind, guys, I've sent this out over a month ago, so this could have been used, the same analysis from a month ago could have been used to be very profitable over the last couple weeks or so, as we see these fundamentals take their play. Overall, this week I'm looking for value to continue increasing. If the euro index continues to increase, we can have a bit of consolidation at this minor key level, which I've set here, all the way up to the 1.1405 would be my first key level to start looking for potential short entries. We could see a bit of consolidation here at the 1.45, and then we see the value drop all the way back down to the key levels which I've set here. So this will depend on the fundamentals that are taking place. Of course, the Russian, Ukraine, US, UK tensions will be having high impact on the market, potentially going against technical analysis and sort of driving the values. So next I'm just going to get into the pounds against the dollar. We're seeing the same sort of thing take place on the pounds against the dollar as well. As you can see, we're in about 36 minutes of this video now, so I won't make it too long. We don't have too many other things to cover, but this is probably the most important part of the video that I'll be going over. If I go back onto the index for the pound, so this represents a weighted value of just the pound, and as you can see here, we've caught support level here, we've caught some demand, and we're increasing. So against the dollar, naturally it will be at a negative correlation. As you can see, this is the dollar index, and if we pop back onto the pounds against the dollar, it's in a negative correlation. Now my expectation going ahead in this week is the pound to actually continue decreasing in value. So I'll be looking at the value to continue this little increase, come to these key levels which I've set here at the 1.3415, and also you can see this green ascending trend line which I've set here. We should see some consolidation here. We could see something along these lines, and a break of this consolidation, and the value to drop back down to these key levels which I've set on the right hand side. So I'm looking at something along these lines. For the currency pairs which I cover on a weekly basis, absolutely free. All the updates will be on Telegram. I may even do a midweek update of this analysis, as this video is getting quite long, to be honest. Next, let's go into gold. So gold, as I mentioned earlier, guys, we're looking for bullish continuations. The fears continue, and the fundamentals still continue to drive the market and create change in the market as well. I'm going to just mention this, guys, because it's very important. As technical analysis, we can do it. People have different methods of technical analysis. There's 50 different proven methods of technical analysis out there that work, that have worked for the last 20 to 30 years consistently and made people profits. But when fundamentals come into play like this, technicals usually go out the drain. So this week I'm looking for bullish continuation, but that is on the basis that the tensions continue to rise. Russia continues to sort of take action against Ukraine. They haven't actually overthrown the government just as of yet, but this will be a major factor of the value increasing once again. Now on the other hand, we can see the value drop. So you can see the blue dotted line here, as always, represents previous week's low. We can see the value break this blue dotted line, come back and retest, and then come back and test these levels at the 28.2% level, which falls out our initial entry point, which is the 1,845, which I mentioned at the beginning of this video as well, where we caught our buys a few weeks ago. Of course, if we don't see this, we should just see some bullish patterns being created here. We could just see maybe like something along these lines, a little breakout of this, and then we could go up to our key level, which I've set here at the $1,916. Now, I'm not going to make it too messy. I'll be doing updates over the week, but overall, as tensions increase, we'll see people putting their money into safe haven assets, and as tensions and fears decrease, we'll be seeing a dump in gold. We'll be seeing a dump also in oil and the energy sector in general. So overall bullish, but it all depends on the fundamentals, guys. So I'm going to be finishing this week's video off with the cryptocurrencies which I cover on a weekly basis, which is Bitcoin and Ethereum. Now, this week we saw Bitcoin catch a bit of support. Last time we saw Bitcoin catch support like this, I mentioned how retail traders are coming into play, so they'll most likely be getting liquidated by the whales, the institutions, and the corporations. This is a factor that can be used throughout all of the markets, especially when it comes to market sentiment. I didn't cover the market sentiment, did I, guys? Let's just pop onto it right now, actually. Give you an idea of how we go against the retail market and retail sentiment. So Euro USD market sentiment, this is just the average value of short positions against long positions according to I believe it's IG Markets, and I think my FX book is sponsored by XM as well. GBP USD also bearish market sentiment, meaning we're probably going to start seeing bullish moves. I've done a clear example of this on previous videos of how the market sentiment is usually completely opposite to what is actually taking place in the markets, because brokers, institutions, they have access to COT reports, which is like a commitment of traders. They have the numbers of how many short positions and how many buy positions are in the market, and what they tend to do is go completely opposite against the majority of the traders to liquidate those positions, catch their own liquidity, and then take the price in the direction that they choose. If we just go down to the gold sentiment, I mentioned how we will be most likely looking at a bullish continuation. As you can see here, the market sentiment right now, guys, is majority buyers, yeah, meaning there is majority sellers, meaning there's a lot of retail coming in selling the market, probably thinking that this fear and things like that is leading to these sells in the market. But this is only because retail have been getting into these previous buy positions, and institutions have now came in, if I pop back onto the gold chart, and liquidated all of the, they came back in and liquidated all of these bullish positions. So anyone who got in, for example, from say this break and was say trying to catch entries here, and anyone who stayed in the market, as you can see, the value came up, that's fine, people went into profit, we actually took our profit just as of here. If you want to rewind it back to our the previous week's review and results, we took our profits up here and we actually entered short positions, coming down to liquidate these positions just about down here when we got into some consolidation phase. So we entered here and we caught short positions coming back down to our key level at the 38.2%. We've currently taken profits for those, and this week we're looking for new opportunities, as I mentioned before. Now with Bitcoin, on the other hand, the market sentiment of course has been bullish, but now we've seen all these positions start getting liquidated, as I mentioned as well. We went against market sentiment last week, got into these short positions, and we saw our targets being hit very nicely. Now I've got these key levels set on the right hand side, which will stay here over the next couple weeks to a month or so. before I do any updates to them. So make sure you take these into account. I'll be putting a screenshot of this exact analysis on Telegram as well, so you can test it for yourself. Overall, I'm looking for short positions. Right now, we've already created this consolidation phase here, so we could look for a value to come back into this liquidity zone and then drop back down to firstly the 33.7k level, maybe see some consolidation here, and then furthermore back down to this 29.2k level. That's what I'm looking for on Bitcoin. Bearish continuation, but at the same time, I will actually mention to you guys, in terms of Russia being disconnected from the SWIFT system, which is like a communications system for transactions being made internationally, they will have to start using their own methods of transactions and doing them internationally. So this won't actually stop them from doing business, but what it will do is potentially affect how they do business. So Russia will, if these sanctions do take place, Russia will definitely have to take on other methodologies of communicating when it comes to transactions internationally, and potentially we could actually see a rise of blockchain systems coming into play, as blockchains can be used for confirming transactions, it can be used for security of transactions, and for communication of transactions as well. So I'm not stating specifically Bitcoin or Ethereum will come into play, but Russia will have to decide what they want to do going forward if they will not be part of this SWIFT system that they're getting threatened to be removed from. Finally, I'll be finishing this video off with Ethereum. Of course, it's the same sort of thing that I'm looking for as always. Bitcoin reflects the value of all of our assets in the cryptos. Right now we're trading between this previous week's high and the previous week's low, so any sort of consolidation here, any sort of bearish momentum, I'm looking for value to continue going down, and potentially new entries at this level here, with 2650 being a potential stop loss, and value to decrease all the way down to the $1,786 level, which we was using a few months ago in terms of catching new entries. So we could see these values be taken out, and as I mentioned, the fundamentals will be taking effect. Right now I'm still looking at this as a bearish continuation, and until we break these previous highs that have been made here, so we need these levels to be broken to confirm if we're going to go back into a bullish trend, or even if it's a short-term bullish reversal to catch more liquidity going down. We will need these values to be broken, these different tops that have been created on the markets to be broken, because when tops are created, we know that there's liquidity that lies on top of the tops. So yeah guys, I'm going to be leaving it as that for this week. If you haven't already, make sure you subscribe to us if you have found this valuable. This video has gone on for a while now, but I hope you have found it valuable, and it gives you an insight into the sort of things that we cover on a weekly basis and how it can be used to be profitable, just from some of the key levels which I'll be sending out on a weekly basis. Of course, the links for my Telegram will be below in the description. I've also got my referral links in the description below. I'm working on quite a few new projects, guys, over this upcoming few months, so keep an eye out for that. I hope you do have a profitable week. Take care of yourself, guys. Peace.